SMF Street Traders, welcome to StockMarketFunding.com and happy holidays to everyone out there. It is your wonderful Labor Day weekend. It's 12:04 p.m. Pacific Standard Time. The date is 9/5 of 2010. We will be addressing trade management with SMF Street Traders right now. And basically, we're going to go zoom right over here at these lower trend lines, and we're going to look at 1999 and year 2000. At key bars, half bar here, 329.72. Lower end bar here, 308.72. Basically, these two particular trend lines back in this point in time is very, very important to understand. Once again, happy holidays. I'm going to show everyone why. SMF Street, one of the things that we're going to do now, we know what this part and this time frame and these prices are. And you know what the SMF bar is. It doesn't matter if it's 4 years ago or 10 years ago or 1 year ago or if it was yesterday. It doesn't matter. It's all relative to the SMF pricing system. So with its accuracy is that we want to know that we got a 308.72. If we continue to hold above that SMF Street Traders, then that means that the trend would be setting up and we would have to monitor it. As long as you have a closing price above it, then you will not be getting aggressively short, because you're going to come down and bounce off that bottom end. The upper end is 329.72. The last highs were 318. And as the people know, last week we were buying up and out of the money calls at the 320 and cashing those in. Plus we did the 310s. Some of the people that did join the free 5-day trial were here to witness those trades live in the market hours with our SMF Street trading staff. The important part to understand now that this is here is I'm going to take this part of the last 3-month movement, which has been parabolic to 52-week highs. The other thing that I want you SMF Street Traders to understand is one thing. This is September bar. Look at the big August bar. From that swing low of 255 to the high of 309.46. That's what this low was. That was the monthly range off of those bottoms. You opened at 226. Your high was 309. The important factor to know is that the low was 225 that day, and it's never looked back. The monthly price range for the month of July, it had a good opening there of 176, made that intraday low at 173.75, but guess what? It closed at 224 that day, and the swing high of that day for the month was 234.45. That's right here. 7, 8, and this is the 9th month. And the range off of those lows was 294.02 SMF Street, and the high is $318. And you do the math, because in your pricing model, the SMF pricing model tells you when to start looking at getting these things short. And we're going to go through all of the put and call ratios and look for the inflated and deflated values. The thing about it is, notice that when I went and drew that trend line, I was drawing that trend line from this location over here, and that's on the first part of the video. So what I did is I took my trend line and I went all the way over here. Okay, so but I started doing the work over there now, and past performance happens to be how a lot of transactions can come back in and play out those same roles. So if I'm not closing above or below half of that bar that was over here in year 2001, then my short side isn't going to work. It will give me a trade to make money, but for the big fat trade, if I'm not closing below 308.72, then I'm not going to get the bigger, fatter dollars on the trade. So SMF, you need to know that that's that part of it. And you need to know that those monthly ranges that I just gave you is that if I draw you your current bar on a monthly level, that's about right there. That's 305.87. The other one was drawn off the 2001 handle year, and this one is drawn off the current price action. So ultimately, you do have support there in your bar for right now. Remember, we've only had one trading week into a holiday on this monthly bar. But nonetheless, it was a gap sequence off that lower price action, and that's ultimately, well, back down. So let's get into the put and call strategies and pricing strategies. All right. SMF Street. This is a 310 call chart. Once again, in our master way of doing things in the options market, is that we are inflated again. How wonderful for us. See what happened last time it got inflated? They come down. None of them will ever stay up here. Let's take a look down here, SMF Street. And here is the 310 call. Right up there at the high. We're putting in a bottom down here at 570. And in that 4-day rally, because today's date, people, is 9/5/2010, 12/14 Pacific Standard Time. And happy holidays again. So basically, we will be putting these trades once we get done with the video here showing you, then I will give you the prices. And once again, it's time to do what? Get paid. So they walked the dog on the call side of the market, stole the premium out here. Both are the same strike, 310, 3 call. 310 put, 310 call. One's inflated, one's got deflated. Now we look for the trade balance, the trade management within the trade balance as a market maker in the option pit. For those that are looking at the tape, you're not going to find this in option books. This is a market maker operation. And basically, I can sell short that and go long this at the same time and get paid. So that comes down, this goes up, and I'm getting paid all in one transaction. If you'd like to learn how to do that, come and take our free 5-day trial. And you can watch us do it during live market hours. Before the trades happen, you'll witness them. So we're not here to sell you nothing, but this is for the MMTs. People that are innocently watching the video, SMF Street, our doors are open to Main Street. International people, you need to get involved now. You qualify to be here. I'm not going to say on the video, but you do qualify to be here. Doesn't matter what country, doesn't matter what race, doesn't matter what part of the world. You can get up right here on SMF Street and get powered by SMF Street and empowered. So I'm going to do some more here, and basically we'll do the pricing next off of the tape, but this is it. SMF Street traders, right now I'm taking you down the road of that $320 call that made that all-time high on Friday. I'm also showing you where you're making the all-time low in that 320 put. This was the trade right here, because when I show you the swing highs and the lows, you'll know why. Here's why. You had a 1050 low with the 1260 top on an intraday bottom-up trade in a deflated price zone. That's the part that you need to know. These contracts, 4 days ago, the highs were 30.84. It's an in-the-money options trade, because when they're, so basically if you take a look at where a price line is, the 320 put is in the money because price line closed at 313.85. So the 320 put is in the money and will move faster in a transaction, providing that the stock continues to sell off from the bottom up. And that's buying the deflated price. On the opposite side up here, the 320 call is inflated. When you shot right here to 318, you peaked out in the inflated price zone at $8 and you closed. Let's see where your close was. Your close on this one was $5.70. So basically the call lost from $8 down to $5.70. That's $2.30. It's inflated. It's saturated. Look what happened last time it got up there. They all love to get inflated, don't they? Isn't it nice to know how to be on the right trade management? Okay, that's the $320 call. And here's a $320 put. So let's let you look at it this way. Right here. They just put this up there. Big breakout. They sold it down. Deflated. Saturated. Inflated. Saturated. That means that you had to have a lot of people and a lot of buyers to try to get that, because the top end of this thing is heavier than heavy. And this bottom end is where the wholesale value is. This is retail up here. This is wholesale down here. Now Amazon has to, we'll have to see if the stock is actually going to break higher or not. Okay, but we're not going to get too much more up here. So we know that the call is out of the money. We know that the put, though, the 320 put happens to be what? In the money. So if we correct in Amazon and start falling down toward those monthly support levels that I showed, then that means that this little guy over here is going to pop right up in value. And let's take a look at the previous week's high. Previous week's high, SMF Street, 1770. The last week, the low was 1050, but the high was only 1260. That's $5 difference. Look at it. So we're going to be monitoring that one along with the 310. Once again, I'm going to come off of the video now, and I'm going to give you the tapes that you need. Inflated. It can go a little bit more inflated. Everything can. And market volatility, but I can guarantee you not too much.